the construct is pretty much, sorry, no, you're good. Our system is pretty much set up that you earn your money twice. And what I mean by that is you earn your income once, when you sell a home and you guys make a commission, and that's awesome. And then you try to put that somewhere, and whatever you do with it, it is, I guess the best way to describe it is a melting ice cube. And so then you do have to go this, what Mark, I guess, was terming the special teams route, the investment route. You have to do all these things to stay ahead of the melting of the ice cube. And then you're not just, a realtor anymore, optimizing for that specialty and talent that you have. You have to wear all these other hats that in an ideal world you wouldn't have to wear. So all of a sudden you're a stock analyst. You have to follow the stock market. You have to understand what is going on. And you have to march further and further out the risk curve investing in stocks in order to just keep up. And I guess, what I mean by that is, if you look at the S&P 500 and kind of what those returns look like, yes, they keep going up, but at the same time, the valuations of these companies, if we're even peripherally aware, it's like their annual earnings at a multiple of like 20 or 30 or 40. So the valuations are just sky high. They're very, very risky, even if you're in index funds and stuff like that, or just trading the S&P. So you're a stock analyst. You've got to invest wisely as far as property is concerned, whether it's a personal property or an investment property. All of this has extreme tax ramifications. So you need to be a tax expert, which is, constantly changing and always a moving scale. And so I guess, the opening theme of kind of the Bitcoin or crypto talk that I proposed to you is, why do we have to do that? Why is the ice cube melting? Is that just a natural phenomenon? Is it just, that's how a market economy works and your ice cube is melting and you have to invest to stay ahead? Or is it a feature of the system? Is the system specifically designed that way, that it's going to function that way? And if it is that way, is there another asset class or an investment out there that, you could you can get off that highway and go somewhere else for sort of like a true savings technology that is what you want to be doing, which is just saving and not having that ice cube melt. So that's kind of the first broad theme. And then my title here, it's still early. I talked to a lot of people about Bitcoin, talked to a lot of people about crypto. It's still early. A lot of people talk to me and they say, I wish I'd gotten in when it was $1 or $100 or $1,000 or 20,000 or 60,000. And I always tell them that, today's price is like a rounding error for where, a lot of people think it's going to go. And it's truly, truly a innovative and disruptive technology. And if you look at like an adoption curve for technologies like this, we're in the very early innings. I like to think about Bitcoin and cryptocurrency. Think about this is like the internet in 1997. It's before smartphones. It's before social media, Facebook, TikTok. It's before, we buy everything and shop online with Amazon. It's before Google. This is still very much like dial-up modem. The infrastructure is being built, but you can, for those of us that are looking at it, you can really see what the runway looks ahead. And then my subtitles here is just kind of Bitcoin is really big in the Twitterverse and just memes and GIFs. I don't know which one it is. I don't know if anyone's comfortable with the pronunciation of that. But anyway, yeah, so a lot of people write on Twitter, few, and FEW as in few people really get it at this point. And then few, PHEW, like, thank goodness that few people get it, because I can still be accumulating Bitcoin at what are, in the long run, relatively inexpensive prices. A little bit about me. I like memes, so I threw this meme on. Again, I like to talk Bitcoin. Mark knows that I can interject Bitcoin and crypto into pretty much any conversation. So here's me with a little Bitcoin Trojan horse. I'm the CFO of a company east of Pittsburgh in Latrobe, Pennsylvania, called X-Coal Energy and Resources. We are a global coal export trading marketing firm. So we purchase coal from mines and suppliers all throughout the US, Northern Appalachia, Southern Appalachia, down near the Gulf. And we sell to primarily steel makers all around the world. A lot of people think coal is like just dirty and just being burned to generate electricity, but most coal in the world is used in the steel manufacturing process. So cars, appliances, infrastructure, that stuff. But on the commodity side, wealth of experience in commodity markets, specifically with coal. And so I'd say that's a big reason why when I saw Bitcoin, I kind of got onto it pretty quickly. We'll talk a lot about it in the coming slides, but it really is sort of I characterize it like a digital gold. I went down the Bitcoin rabbit hole, as Mark said, in 2017. So I don't recommend this. When I was thinking about Bitcoin and first researching it, I brought it up with my wife, Erica, at our anniversary dinner. I had the Bitcoin talk with her there, which I don't recommend. So if you're at all interested in what I'm saying, don't go home and don't wait for an anniversary.
Oh, that's hilarious.
Yeah, but I hold it over Erica's head all the time because I'm like, well, it's, we're doing pretty well with it, so it must have been the right call. I graduated with Mark from Grove City College with a bachelor's in accounting, but really what I guess the emphasis here is my real passion was economics. I kind of did accounting as like a means to an end to get a job or get into the workforce. But Grove City College is world renowned for their Austrian School of Economics that they teach there. It's very stringent free market economics, and just learned a ton about what that's supposed to look like, what sound money principles look like. So that aided me very well along the kind of the Bitcoin thing. And then also I'm a CPA, which again, just kind of explaining my background, why some of this stuff made sense to me early on. I was an auditor with PwC for the first several years of my career. And I'm very much wired, trust but verify. That auditor is like very strong in my brain. So we'll get into it, but the auditability of Bitcoin, being able to understand how many Bitcoin exist down to the point 0.0000001 of a Bitcoin was very intriguing for me. So yeah, so between the commodity background, the free market principles, and this kind of CPA stuff, auditor stuff, I was there in 2017, just like waiting in the water, just waiting for this wave to catch me, kind of jumped on. And then the last bullet on this slide is by far the most important. I am in a fantasy football league with Mark Sandvig. I am a 3-time champion. Very proud of this. Mark also has 3 championships. We're tied for the lead.
This league started in 2004 and going strong. We're meeting up next weekend and get together in person, which is pretty fun. One friend is coming in from Japan.
Oh wow!
Soon to be 4-time champion, Mark. And then just lastly, so disclaimer at the bottom, I'm not a licensed financial advisor. So definitely take what I have to say. I strongly encourage, do your own work, do your own research. I'm happy to talk further with any of you on Bitcoin, on cryptocurrencies, but you kind of have to understand it, on a pretty decent level before you want to jump in. So be careful. It is volatile. Do not invest more than you're comfortable losing on the downside. So my next slide, I just want to, if anyone starts getting this vibe, just raise your hand and time out, Joel. Let's go back and re-explain something. So I definitely don't want to just lecture and talk at you guys the whole time. It definitely can be a dialogue. So at any point, just stop me, unmute yourself, yell a question. I'm happy to interact and answer any questions you guys have. So quick agenda. We'll do Bitcoin, the basics, which is just, what is it? How does it work? We'll do a macroeconomic backdrop. And I do this because I really don't like to try to explain to somebody what Bitcoin is if you don't understand how money works today. So forget about crypto and Bitcoin. How does the US dollar system work? You really have to understand both to understand the value proposition of Bitcoin or potentially other cryptocurrencies. So that's just vitally important. And the way I like to explain that is, money is far and away the most important good in the economy. If you think about it, it is one half of every single transaction. Every single house, you guys sell, unless someone's, posting up stock or something like that, or homes are being sold in Bitcoin. They're for dollars. And if you think about your clients when they're looking to buy a home, like I'm sure sometimes they drive you crazy because they're worried about every single attribute of that home that they're buying. Location, where is it at? Does it have hardwood or carpet or tile? Is it an open floor plan? Is the kitchen a white kitchen? Do we have to rip out these cherry cabinets? And is it farmhouse? Is it, lot size? They go crazy about literally every feature of the home. And then the interesting thing is, on the other side of that transaction, the buyer just wants the cash. And they're concerned about maximizing getting as much as they can. And they're certainly concerned about the creditworthiness of the buyer and such like that. But they're not giving a second thought about the money. And nobody does. We exchange our labor every day and we're collecting a paycheck. No one really thinks about it. They just take it to the bank and put it in, and then it's, what stock do I invest in, stuff like that. But so kind of one of the challenges I want to do today is like really think about money, which is why this macroeconomic backdrop is so important. Who made the money? Why were they able to make the money? How much of the money did they make if they made it? If they did create the money, who got the money first? If somebody got the money first, why did they get the money first? And what are the effects of some people getting it first and some people getting it, downstream, 10 times removed? Did they make too much of the money? What is the process in place that if they're printing too much money, is there someone with like a whistle or radar that goes off that, hey, we overdid it. The economy is running too hot. We printed too much. So again, you have to bear with me. I know we didn't sign up today for a giant course in economic theory, but again, if you're really going to get Bitcoin, you have to understand how the financial system works today. Then the third section, I copied this slide deck off the web. I have no idea why the sections are both lettered and numbered. So section C3 is common misconceptions and attacks on Bitcoin. So these are just, Bitcoin is very much coming into the mainstream. We'll talk through that. BlackRock is in, Fidelity is in, JP Morgan Chase is in. These are all people who were out 5 years ago. The CEOs of all these companies were saying Bitcoin was evil, Bitcoin was awful, you should never touch it. And now all of those companies are in because their clients want it. And so now they're kind of begrudgingly in. So it is going mainstream, but if you just Google Bitcoin, you'll find a whole host of articles just with a whole host of misconceptions and hit pieces on Bitcoin. So I just want to address some of those quickly. And then the last one is, if you are interested, how would you get started? How would you acquire Bitcoin yourself? And then I know we've talked a lot about Bitcoin. We'll end with like a broad discussion of all of the other cryptocurrencies and kind of what do we do with all the other stuff. So first, just a super intro to Bitcoin. We'll fly through this. It was created by a person named Satoshi Nakamoto. We do not know who this person is. This was just an online name that they used on a blog. They published what's known as the Bitcoin white paper on October 28th, 2008. And this white paper, it's available on the web. You can go read it. I think it's like 10 pages. And it's short and sweet. It's very computer sciencey technical. But he just kind of lays out, hey, I have this idea for a new money and payment system. Not even, he calls it Bitcoin and he says, this is what it is. A few months later, on January 3rd, he launches this. He mines the first Bitcoin block. We'll get into what blocks are, but he mines the first block called the Genesis block. He starts it. At that time, very few people on the planet just start playing around with it. They think, oh, wow, this is interesting. I'll download the Bitcoin software, start working on it. It's important to note this is open source software. So it's stuff that's just out on the web and you can grab it, download it, and use it. It's not closed system software like your banking account or checking account or something like that, where there's a firewall. You can't get in to change the code of your PNC bank account or something like that. But Satoshi completely steps away in December of 2010. He just totally leaves the project. That's the last time he made a post. nobody's heard from him since, which in a lot of ways is very beneficial. There's no real founder of Bitcoin that you can stick a microphone in front of and he says something stupid. It's totally leaderless, totally decentralized. No one's in charge of Bitcoin. There's no Mr. Bitcoin CEO. Just a couple of weird things. The first Bitcoin true purchase for goods was May of 2011. It was 10,000 Bitcoin for 2 Papa John's pizzas, which in today's currency or Bitcoin conversion would be approximately $230 billion. Because very expensive.
I love
Sorry, what's that, Mark?
I love that garlic butter sauce, right?
Hopefully he got it. Hopefully the delivery. And then Bitcoin reaches $1 by February of 2011. We're kind of starting off on this trajectory, which it doesn't seem like a lot to reach $1, but keep in mind, it started sub a penny. So we're talking about massive exponential growth to get to $1. I threw this in. This is the Genesis block. This is what it kind of looks like. So you don't have to worry about all the numbers and stuff like that. This block is containing transaction details, amounts, the Bitcoin wallet and stuff that went to it. But I'm more focused on, you can actually insert a little bit of text inside a Bitcoin block whenever you do it. So Satoshi, on the very first one, he put in this. This is an article from the Financial Times. I'll move it myself so you can kind of see it. From January 2009 when he launched it. So it says, Chancellor on brink of second bailout of banks. So from the very beginning, Bitcoin is a lot of things, but it certainly was Satoshi's effort to looking at the global financial crisis of 2008, 2009, the bailout of the banks, all the shady stuff that happened, who got bailed out, how much money was printed, all that stuff. It was definitely kind of a look at, is this the right way to be doing this?
Hey, Mumper.
Yo.
I accidentally started this from my personal account, which is where the Heather Leon issue came up. Guys, I'm going to go back to the corporate account and send it back out to everybody. Stand by for 2 minutes while I change this. So sorry.
Yeah, no problem.